Go live. I'll get my batteries up. Come on, YouTube. So with that slight delay. They're still not quite there yet. Let's see. It'll be so live here shortly. Okay, YouTube is just like going super slow. Okay, there we go. All right, there we go. All right, what's going on, everybody? I guess I'm trying. Let me get a sound check. Sound check. Can you guys hear me? Can you guys hear me clearly? Press 1 in the chat if you can hear me clearly. Press 1 in the back chat if you can hear a brother clearly. If not, I'm going to have to resort to plan B. Can you guys hear me clearly? Mic check. Testing, 1, 2, 3. Mic check. Sorry about this, guys. I got plugged in the new headphone here, and my settings were all over the place. So I'm hoping that you guys can hear me here. Let me know if you guys can hear me on the YouTube side. Testing. Testing, 1, 2, 3. I keep asking if anybody can hear me. Everybody's coming in and say, hey, what's up? Peace, power, profit. Right? Thank you, brother Unpack. Right? Unpack, excuse me. Right? Can you guys hear me clearly? I need to do a mic check. It sounds muffled. Thank you, brother. See, brother came in already knowing what to do. He's like, it sounds muffled. So, let me see if I can fix my microphone here in 1 second. So I didn't get a chance to do the settings on this one, so I need to let me put the other one back on. Thank you for that, brother. Thank you. Please, 1 second. While I'm waiting to get this done, let's put on something. 1 second.
Do you know who I am?
Yes. You are the boss.
Yeah, I'm the boss.
So man, go back to the to my trusty Rusty's here. All right. All right. So I think we got the mic situation fixed here. Yeah, showing that it's using it. So I guess we're working here. Okay, yeah, so it's working. So I need to change that later in the Google settings to make sure I have it right. All right, anyway, so let's get to it because I don't have long, and I'm pretty sure you guys are, again, busy as always too. And when you do tune in, you try to come in to get a little, a little insight, share some insight of what as well. So of course, I want to be very, as I always like to say, cognizant of that, so we can get through it. So again, basically, I just want to come on to do like a little back end of the market kind of analysis because a lot of people, well, I'm saying some people have been kind of asking me questions considering the market in terms of of late how the market has been behaving. Some of these things that they're not new to us in the aspect that we've already discussed leading up into some of the volatility that we're experiencing in the markets, that these will be great opportunities to capitalize on. And so because of that, we've been having some great success trading this volatility in the markets. Of course, more so at a place where we've been able to capture a lot of these peak to trough setups, meaning shorting at the top and kind of letting it come down. All right. So today, of course, we got a bounce, obviously, notably so because we hit a major point of support. One that we had already discussed several times, so it was nothing new. And it was just a great opportunity for us to reset some of those puts, that we had bought previously, right? Take profit, of course, but also, um, get to the place where, you allow the market to kind of, have a what they call RSI reset, trade some calls back to the upside, of course, catch some of these bounce plays. So we can benefit off that as well. All right. Sorry, my chart a little junky here. All right. But y'all know this is a working chart. And lo and behold, what do you see on the screen, right? What do you see on the screen right here? All right. This is part of why we are very keen, meticulous, and not emotional about how we value and view markets. We literally claimed last time we were on, I said 443, 80-ish area is the area that we want to watch in the S&P 500 for us a bounce or a particular gap closure field. Clear as day. What do you see right there? Gap closure field actually came all the way down to 443, 29. That's when it just completely bounced. But you see that happened at the level of that wick down there. And the body, the candles, of course, you see right at the body, that candle kind of came around that 443.98-ish area. But anywhere within inside of that was obviously, I would say from 443.75 to 443.30 will be areas where we can say definitively that we have closed that gap. As soon as we got that gap closure, of course, you see we still got our little bands up there to reflect, at least a portion of that. But as soon as we saw that happen, that was instant. If we wasn't going to have what consider to be the breakdown from that point, because typically that's what happens in most cases. If you have a lot of follow through or you selling off into a lot of implied weakness, and if the algos don't cut on or Wall Street don't show up to the party at around these sort of VPOCs or places of control where you want to have a suitable support point for a bounce, then you will have that steady flush, right? In this case, the market, it held this weight and go, right? It bounced off that point of support, which we literally call that area of support, right? Or gap closure field area. And from there, we got a wicked bounce, right? Well, we say wicked because, again, we're talking about, a steady decline over the last 3-4 days. Well, 5 days if you want to put it into true context, because I've been shorting the market every day for the past 5 days. Again, notably so, these are things that we all discuss based upon the pattern that we came out of in terms of this rising wedge pattern clearly right here was, you know, that was a go signal for what? For put buyers. You stalled out at around the all-time high area. We knew we had a lot of data that was kind of looming. CPI data, the idea that they might start tapering back on the bonds, unemployment numbers, hit or miss, whatever. But a lot of that fundamental aspect of data that really, you know, if you look back, let's say the past month, up until COVID, right, or back to COVID, a lot of the bad news turned out to be good news because, again, at that point, you had an accommodative Fed. Now, a lot of that idea that the things that Wall Street is kind of banking on happening to be a good catalyst to keep the markets, excited or anticipating more stimulus by the Feds, that game plan or that play out of the playbook is starting to run dry. Right, people have gotten used to that now. Now they're not so confident in saying, okay, all bad news is good news now, and good news is better news. Now it's like, okay, now some of this bad news is actually going to be a problem. Why? Number one, because we know inflation is running rampant. It's not transitory. Number two, we understand that outflows have now been able to outpace a lot of the inflows of lately because of the fact that the people are now feeling more, skittish about market dip buying perspective. So they're being more hedge laden. Now they're starting to hedge more. Of course, we've been, speaking about that religiously, that we need to be more of the mindset to hedge more, up at around these all-time highs, 453, 454, 453, 454, and 455 area. And lo and behold, those areas are obviously checked out to be great areas to buy puts. Again, we talk about, at least 2 weeks out, a week out, basically coming out of last week, those were golden, right? Those were golden put buys because, again, clearly you see a rising wedge pattern here, which denotes what? A bearish signal. Not always is 99% conclusive, but in this case, or 100% conclusive, but you can say easily, 95% plus that we're going to get that pullback. Now, we didn't know to what extent, but we say, well, if we break trend, right, and come down to test the midline here, right around this first gap scenario over here, if we close that gap around 450, that will open up the gates for what? Potentially what? Flooding down and maybe test this next gap, which came down to be around, the 443 areas, right? And it just worked magically, as we planned it to be. And the end result was a lot of, profiting off buying literally out of the money type calls. The expansion aspect of the markets gave premium buyers a really good opportunity to make some big money trading with a small lot values of price value. What I mean, right? Meaning you're buying out of the money puts at around 453, 454, especially when we broke 450. Let's say you bought the 448s, right? Or the 447s, right? Those calls printed heavily, and they were trading what? 40 cents a contract, 60 cents a contract. One scenario I bought, and I have the receipts to it. I did a case because y'all know I've been on this small, do a little something strange for a small piece of change campaign, where I took a 17-cent put buy at that same area. I was mapping it out. I saw the breakdown on the rising wedge. I took a little. I think it was like a 50. Was it a $50 strike put at around the all-time high, close to that? I have to pull it up and show you guys this, but it's no cap here. Well, basically, in a nutshell, I turned that $17 into $800. I got it all recorded. I've been sharing it with our group that's on our Facebook side. And basically, what we had been discussing leading up to this was that we are about to get some real expansion in the market, meaning that downside risk profile is finna be game on, right? People finna buy into this, this potential pullback, or they're gonna hedge their top side positions, right? A lot of these overbought stocks that were in the growth sector, meaning like the tech stocks, stuff like that, they were going to always meet that somewhat, that man in the mirror, right? And face that reality that is just, these stocks are just really, really swollen. They're overbought. Maybe a little profit taking is in the queue right now. We need to start looking at that as a viable option now. If we're going to get, an opportunity to somewhat get a small, what they call dollar cost average bounce support, coming down, filling some of these gaps. Of course, we didn't know to extent if we was going to even bounce at 443, but we knew that was going to be a stationary support point, based upon the fact that there's a lot of support, momentum sit at around that area. Of course, you got a little, a confirmation candle on this side of that area. You got a, obviously, long doji there. And then you got a lot of those little chatter points, up in here where people just bought, from a very controlled perspective here. Sat road the middle of that trend line there. That's a lot of what they call controlled buying, right? Be it algos, institutions, whomever, but that's a lot of strength. And then retail obviously in there as well. But that was a lot of strength at or around that 443 support point, which we felt like if we close that gap, at least that gives us some kind of solace to say, okay, we can bounce here and we can play ball a little bit more, efficient, right? Going forward. And clear as day, as soon as we got down to that 443, 20, 30 area, it held, it hesitated for a moment, and then instantly the buying came in, right? The volume came in. Now, of course, if we look at that on let's say on the hourly chart, it's going to have a very definitive look, right? You see clearly here, right at that point of the bounce point here, clearly you can see right here. It was game. Hold up, no, take that back. We're supposed to be over here, right? All right, let me come back over here. Here we go, right here, right? Clearly at that point, at around that 1030ish plus area, that bounce came alive, and after that, it was just game on. The buying just came in, just like game busters, right? Overtaking the 200-day moving average here, of course, that's this clearly here is on the hourly chart. So anytime you cross over 200 moving average and you hold above it, or let's say you hover above it for like 5 minutes. Sometimes people use 10. I use the 5-minute rule. Typically, that's a game on buy opportunity, right? I mean, there's rules of engagement tells us, okay, you need to buy here. And so, even at that point around 446, 446.50-ish, somewhere around there, some people got in a little earlier at the break of the, the 443 support point hold, right? I switched to a couple calls at that point. I trimmed some of my puts. I left some on just in case it was a fake out. And I set my stop losses, for some of the puts I had around 446. And then I had the other around about 446.20 something, right? Kind of giving back maybe at most a couple $100, but clearly I was up in a lot of the other contracts I had, well up over $300, $400, $600 in a couple of them. I just been kind of crushing the SPY all week. So clearly at that point there, when we crossed above that, that's when I added more calls, right? So a little bit around 446.30 area, I started adding more call positions for the bounce to particularly go higher because I saw at that point we were starting to have what? A convergence and a 200 moving average with a 20-day moving average, and then it had a slight divergence where that 200 moving average had slightly start, going above the 20-day moving average. So that made it, make me feel even more convicted to buy more calls at that point. And so all these calls were basically in the money-based calls, 446 strike. I bought 447 strike, several, about 2 446s and 2 447 strike, right? And just recently, after we kind of, ran up and pulled all the way back down near that 446 and change. Remember, 446, I think it was somewhere around about 446. It was like 446. What was it? 50-ish, 60 area. I bought a 448. Basically, I'm trying to get it, accurate in terms of which one, what price it was. But I bought a 448 there. So right now I got 5 calls on, right? And we just broke over 448. So while we're talking, we just broke over 448.09, as you see here, of course, on our screen here. And that breakout is still what? In continuation. So as of now, those calls are now printing nicely. After riding this market down, beautifully, coming off the all-time high area, now we're having this somewhat reversal point. Now we have some resistance that we're going to particularly run into around about 448.50 area. And I'm banking on that being an out point or a profit taking point. If we can't clear that area and get above it, of course, let me do a trend line through that right now. So that way it'd be no secret, that is a point of reference that definitely we'll be looking at far as the exit strategy. If the market can't obviously clear that area and get above it clear, you can see right there, that's resistance there. That's, resistance here in that point there, and now, from that point, the market has to prove itself by being able to clear that area again to try to go back and test that 450 plus area, right? And so, I mean, we just killed this trade. When I say we killed it, we traded this thing so methodical over the past 4 days. It's just been crazy. So literally in one account, I turned $17 into 800, and then in another account, or the Robinhood scenario, because I always make money and I take money out of it. I put I want to say $180 into it last week, leading up into this trade because I was trading obviously through Webull and my TD Ameritrade. So I made sure I had at least about a couple $100 and around about 180, whatever, because I was planning for this pullback. So based in that count, I turned that 180 into around $2,600 in 4 days. So about 4 days, that 200, we'll just say $200. We turned that into like what, $2,600, close to $3,000. Now altogether, roughly, well over 3,400 bucks in 4 days. That's $3,400 in 4 days, with no more than maybe $210. Right? So basically $210 turned into $3,400 in 4 days, just riding the SPY down. And I was trading other stuff like AMC. Of course, I hit, that's a mixture of just not all SPY puts, but I did trade some of AMC when it broke down as well. So that was a great trade. That trade ended up making me roughly around about $1,300 as well. So that accounted for at least a third of that, that I made over the past 4 days just trading the SPY to the downside. Right. And so the market's just been really giving us some really good premium buy opportunities here where you necessarily don't have to sell puts or sell calls, where you could just buy premium outright, because once we know volatility kicks in, because we've been watching the VIX and the dollar, you can really trade a lot of that, that premium for maximum potential profit once you have a lot of what they call skittish dip buyer potential, buyers in the market at this point. Because now we're trading to the downside, of course. So a lot of these people who are more perma bull mindset, who typically only just trade one way to the upside because they look like shorting is unethical, they got a whole lot of excuses why they don't hedge, right? Or some of them just don't know how to, whatever. But for us, it was like, oh, we finna eat, right? We're gonna eat really nicely off this pullback. And lo and behold, we did beautifully, right? Rode this market all the way down, capitalized on that, again, came away with about $3,400 in about 4 days of trading, spending no more than maybe about $210 total. $210 total. So I would say definitely doing a little something strange for a small piece of change campaign. 100% go, right? 100% success, right? So excited for that. And as of now, of course, these calls that I have now at around the 200-day moving average here are starting to really, really pay out as well back on the reversal side, right? So this is what I'll be talking about a lot when I, speak, very candidly about understanding how to trade peak to trough, right? How to trade peak to trough, right? Again, going back to that rising wedge pattern that we mapped out, we clearly said, hey, this is the opportunity here where, we finna have some pullback. We plan for it, and we will successfully buying positions right around this point here, right? When we start having that pullback here, and we wrote this baby down from that point all the way down to that bottom pivot point or gap fill area around about 443.50, 443.30-ish area, if you want to say that, right? If you want to be very, particular, right? All right, and now we're playing what? The upside bounce, particularly for call buyers who are trying to take advantage of this 1 hourly chart, cresting above the 200-day moving average, testing that point of resistance, getting close to it at this point where we got a little wick that kind of came up towards it, but not necessarily met it, completely here at this guy right here, right? So we kind of topped out so far at around about 448.16, right? But again, looking for it to get back up towards 448.50 area, whether or not that's going to be a good point for it to hold or not. That's where we're looking to take profit, right? Being if we get up there and we fail and we see some weakness up there, definitely for myself, I'm going to be clearing that position out. If we don't get that within inside this intraday, maybe I have to kind of sit through it for tomorrow, futures the market, hope the market don't go crazy. We do have some economic data coming out tomorrow, but nonetheless, this trade or these succession of trades have been nothing but just cash grabs here, cash grabs. I mean, very detailed orientated, easy trades where you necessarily didn't have to fight the market. We didn't have to fight the Fed, right? Because the Fed pretty much became moot at a point where even at the $1 trillion reverse repo operation that they were still pumping into the markets, well, everybody was selling it to them. So that was just free money that it was printing and just giving it away to, to the bulls or to give it to the bearish side of the market where people were starting to hedge anyway by buying puts and shorting outright. And now you got this little bounce here. Of course, that's just more point where the market was kind of oversold. Look at the RSI down here. We got down to around about a 29 on the RSI. And typically we know the markets in terms of the SPY, that necessarily doesn't denote that it'll always bounce there, but most times it will try to react to that area if it can. If it had a point where you just seen a lot of outflow begin to thin out and the inflow begin to pick up again, where you would have a volume change, right, or a premium war kind of changing up the guard, where people say, okay, now I'm gonna roll back into some call buys here, and that's basically what people did. Clearly, you can see that there, right? You kind of tweezed it out a little bit there, and then they kind of came back in with the buyers there on the call side, right? So again, a lot of great, a lot of money was made over this past 5 days, if you want to say, if you will, 5 days of trading where it was just a given, where the money was just easy to make if you just stayed true to your principles and your discipline, of understanding how charts are layered in a way where you can just, again, when they say follow the trend, right? The trend is your friend. Well, the trend was definitely our friend, especially on the put side, right? Coming off again the rising wedge pattern, riding this baby all the way back down to 453. So basically about a 10 to a 12 point pullback here, right? 1, 2, 3, 4, 5, right? 5 days, right? Even granted that if you just want to start at this point here, right? Again, about a 7 to 8 point pullback at that point, right? So really, really great trade. I wanted to come on and share that because I know a lot of you guys were that were inside of the mentor sessions or just watching what we spoke about last week on the live stream when I came on YouTube. These are the areas that we were speaking about, what we were very excited about coming into this week that we just couldn't wait to trade. And lo and behold, it honored every aspect of what we thought would happen. And we cannot be no more than just ecstatic that, this was a no struggle, again, rapid succession of trades that we took, right? That just gave us clean profit, right? So again, very excited by that. Excited that, going forward here, we still have some opportunities to kind of come back and play some of this, downside back to the 200 moving average at some point if the market can't push above that resistance at 448.50 area. And if we stall out at around that area and don't break through it definitively, like I said before, of course, I will be reversing a lot of those calls and buying puts again, trading it back down towards the 200 moving average. Excuse me, the 200 and the 20 here, basically almost, parallel there, around about 446, right? So again, there's a nice little game plan for you guys that we have set up here. Of course, a lot of this stuff is, you guys are already being able to map this on your own. This is not investment advice. These are just my opinions. As you see my disclaimers down in my description box, this is clearly my opinion. And so thus far, my opinion has been backed up by a strong thesis of fact because we benefited and profited beautifully off that rising wedge pattern all the way down to the gap closure at 443, right? And I posted the gap closure diagram, I think, last week several times, and I also posted it from a Webull screenshot to let everybody know we're looking for that gap fill around 443. And lo and behold, we got every bit of that. And, it was just a great trade, right? It was a great trade. What can I say, right? What can I say, right? So shout out to everybody, that's been, been watching, who's been patient with the markets, who's been watching again. Apple event. Of course, we traded that too, right? We sold the news on Apple, right? If you did watch the Apple event, y'all saw like I saw. It was whatever, right? But I think markets have gotten very, and just another, a different color phone now, right? And so we was prepared for even for the Apple short, and we shorted Apple. Apple obviously being very weighted in the Dow and the S and in the Nasdaq terms of tech sector, it brought the markets down with it, right? It added more steam, I should say, and bringing the S&P 500 down. So again, as we see here clearly, a great trade nonetheless. And now we're benefiting again with buying calls to the upside off that 443 support bounce, getting confirmation even more so when we cross over the 200-day moving average here on the hourly chart. And the 20 obviously, diverging there. Now it's starting to was converged and diverging with the 200 kind of piercing above the 20 moving average, which is definitely a buy signal, even more so. And we're just following the rules of engagement, right? We're just following the rules of engagement. When a longer time frame moving average crosses above a shorter time frame, that is definitely a bullish signal. Definitely a bullish signal. Clearly, as you can see there with the 200 moving average there. It seems like it's still in a straight line, but that's a solid piercing above the 20 moving average there, which obviously denotes, again, a buy signal. right? So right now those calls are eating well. So as of now, if you just add in that extra bit of calls that I now have benefited from by trading the chart, reversal here, we're clearly up above over maybe $4,300 here in profit altogether in about 5 days of trading, right? And that's coming off again about $210, right? It's about $210 is now worth about $4,400, about $4,400 here, right? So very excited about being able to trade and share these trades. I've been sharing these trades like literally back to back. So a lot of you guys in our Facebook group, y'all been seeing this stuff. This brother been posting a lot lately, just religiously, because typically I don't, right? And the only reason I do it sometimes is when we have a very definitive thesis on the docket, right? I want to be able to show people in real time, right? This is what I'm looking at. These are my targets. I've been posting all that, so everything's been completely transparent. Where you see me post my targets before the market even moved. Like, here's my first target, second target, third target, fourth target. These are what I'm trading for, right? All right, so that way there's no kind of ambiguity in terms of my strategy here, and we just hit every last one of those goals. We hit every last one of those goals, right? And so it's the same thing with my call buy. Now, I didn't get a chance to post a lot of those call buys in the flip side, but I'll post some of the profits on some of them, I guess, a little later. But it was already known that we was going to buy that dip at around the 443 gap closure point, and clearly is day we closed the gap here at 443.50 area, 443.30 area, and the bounce came. I mean, you see it there clearly on the 1 hour chart. I mean, can't make this stuff up, right? Right? We don't make stuff up, right? Because we trade with the market what provides us and gives us for a place of being stewards of the game, respecting the craft in a way where we can benefit off what off opportunity. So clearly now you got a channel here where you got a 448.50 points resistance, and we have a bounce point of what 443. So roughly that's about what 5 points, right? About 5 points. So you got about a 5 point window of success to now trade out of, right? So let me draw that on here, right? Because y'all know I love doing what they call channel buy, split the middle down the middle, and play top side and bottom side. That becomes a great equilibrium point where you can say I can play any bounces at around that point, to the peak or back down to the trough. So now we got about a 5 point window, right? We got a 5 point window here that we're playing off of inside of this channel here, right? Until that changes, we're going to stay very cognizant of what we're doing here and don't try to get ahead of ourselves. Now, I know some people are going to be willing to, very excited about wanting to buy some 450 strike calls going into Friday because they think the market is kind of done pulling back. May very well be so, but I would say at the point, even though we've been doing really well at the premium buying in the money, I would say make sure you keep your strike close as possible in the money at this point because you only have 2 days of expiration. And typically on the back end of the week, it gets a little tricky because you don't have anything to really give you that definitive bias in terms of a bullish move or bearish move. Stay close to in the money because you don't want to have the theta on the Greeks go against you, right? So that's just food for thought. Stay close to in the money if you're going to buy any kind of directional bias. So that way you don't get killed unless you just want to take that kind of adverse risk. And that's not going to cost you a lot because you buy out of the money, but still, make sure you do it with some level of, with a level of consciousness that, that you can exceed or hit or get close to hitting that goal. Right. So again, there you go. I just wanted to kind of come on and share that. So thank y'all for tuning in. Thus far, thank Sister Monica in the building. Go subscribe to our YouTube channel. Happy to have the Eoba in the house, right? Go subscribe to our YouTube channel. Over Rich in the building, Brother Master in the building. Over Chris in the building, as always, holding it down, right? Over Chris been killing it lately too. Again, go subscribe to his YouTube channel. Don't hesitate. Don't think twice, right? Our family, everything is in the building as well. Our family, Unpack came in the building too. Happy to have him in the house, right? As always, happy to have you guys stopping through, right? Sharing love and learning and also, being a part of this great movement. So we're excited about where we've been able to take this market over the past few days successfully. Again, a great campaign where we again successful in turning $210 into now about $4,400, right? Let me see, about $4,500. So $210 into $4,500 in 5 days, I would definitely consider that a success. And we map these trades out. This is not hindsight throwing out numbers. No, we map these trades out, trade for trade, pivot for pivot. We talked it all the way through, right? So that's the perks of being in our little Facebook group, because we definitely did that, right? That's exactly what we did, and I posted stuff across 3 or 4 different groups, right? All right, my econ training group with Sister Monica, where she heads up that group, our private message group that we have with Facebook for my little scenario, and then of course what we our Get Money group with our brother Chavez, right? A part of Amara squad side of the house, been sharing that with the family over there. So everybody been watching this happen real time, literally trade for trade, watching me post profits, watching me kind of giving my backstory to why I'm taking this trade. These are my pivot points, and it's just been phenomenal. So again, I'm just excited that you guys were patient and allowed these things to break down and happen for you guys as well if you took any of those trades, right? And so, it's just phenomenal, right? So I'm excited to always come on live and share when we have success. Individually, we have success as a group. Why? Because we're trying to do these things in a way where everybody can see benefit throughout their training, how these things can unfold if you are patient and trust the process. All right, that's one of our famous sayings: trust the process. Right? Well, it's no secret, right? We literally plan for this trade weeks in advance. So we didn't just start thinking about this trade or these trades in terms of the puts. Off this rising wedge, we talked about that, way back up and down the areas here. We just been planning for it. Like at some point, we're going to hit that point of what? Of resistance. The market's going to stall out because now the market is starting to get what? Short of what? Short of what? Call buyers, right? Or just buyers who at liberty to the aspect where we know the markets are getting exhausted, right? The markets are starting to get exhausted, and sure enough, it did. It channeled out into the rising wedge, and after that, just downtrending. And we just downtrended, and looks like we might take out that 448.50 area going into the close. Now we at the 448.13, and we still pumping to the upside, going up towards that top side of the channel there, clear as day there. We see that that back end push that we typically get in the markets when the market was just feeling very froggy because Jerome Powell was on the ones and twos mixing and scratching, right? Well, they're feeding off this frenzy here, off this bottom push, and looks like we may get a chance to get close to it before 4 o'clock kicks in here, right? So again, look, gotta love this stuff, right? That's all I can say. You gotta love this stuff, right? So digital round of applause, right, for everybody who was patient and who took advantage of this opportunity thus far, and being able to trade these peak to troughs beautifully, right? Trade these peak to troughs beautifully. So again, understanding the value of what? Market psychology, right? Market psychology. We definitely did that, right? We definitely did that. We played that euphoria down, all the way down, and people who tried to revenge trade the market because the market was falling, they just thought they could just buy the dip, buy the dip, buy the dip. They got crushed, right? They went from denial, fear, pessimism, panic to capitulation. And right at they hit that point of capitulation, then hitting anger, that's when we stepped in and bought calls, reversed our puts and bought calls, and now we ride it back up to the optimism, what? The optimism trend line, which is going to be that what? That 448.50, right? That 448.50 going to be the optimism, basically line in the sand, whether we break out and go higher or that becomes resistance and we pull back from it and try to test at least that mid trend line of the 200-day moving average around about 446. And we have a triple witching coming up this weekend, this Friday, excuse me. Thank you, Over Rich B, for pointing that out. We have triple witching. I think it's triple witching this time. It's either triple witching or quad witching this Friday. So that's going to be crazy. We had some crazy imbalances yesterday that spoofed the market at the end of the day. So typically Friday is going to be wild because that's going to be a rebalancing, with steroids, right? With quadruple witching. So we'll see how these 13D filings come out with a lot of these hedge funds. That's basically what's happening. A lot of calls and puts going to expire on the future side and on the equity side all at once. That's going to cause the market to kind of be like moving all over the place. That's what quadruple witching is in the layman terms perspective, right? But nonetheless, that's going to be great to watch, see how that, how the market fares after that. And, we'll be prepared one way or the other, right? So again, shout out to everybody again. Again, I just want, I'm not going to be on here alone. I want to come on and share this with you guys. Exactly what we planned for, literally what we planned for and what we benefit off of trading this market down to that 443 gap closure. And now we're planning to bounce back up towards that 448.50. And as I just said, we may take it out before we get out of here, before the market hits, right? So let me see here, check my little, see where we at over here. Yep, going again, looking very good. Those calls are beasting right now. I got them spread out like I've been doing. I got them spread out across, Robinhood and also my Tastyworks account. So as of now, oh, that baby, yeah, they looking really good. So we up, nice little bag here. Up a nice little bag on the call bounce here. Loving that at this point. I might close one of them out. Let me see. This one here was what? How much I paid for this? I think I paid for this one like what? What I paid for this call here? About 70 cents, somewhere around there. 80 cents for this one. Let me see. And it's up near $200. Or no, what is it? Up oh, okay, this was the other one. This one here I paid $1. I paid $1.50 for this one, right? So this one's up over $100 and change, about 130, $40 here. So it's making money too. And then the other ones I have over there in Robinhood are just definitely banging out right now. So again, just look, gotta love this stuff, man. Just gotta love being able to be successful at putting out a good thesis and being able to trade, again with discipline, right? With discipline, in a way where you can see the fruit of your labor, pay itself out. So excited for that. All right. So yeah, I think we got jobless numbers again tomorrow. Every Thursday we have jobless numbers or some kind of economic data dealing with the unemployment side. So that may be interesting to see how that turn out tomorrow as well. Thank you for that over snotball in the building. Right. So we got a lot of things on the table still going forward. The idea of tapering is not off the table. Of course, we just said that they may push it back to maybe October, November timeframe, maybe. Right. But that just gives the market just a little bit more time before they have to get ready to go to what? Go to jail. Right. Because today they got to what? They got to get out of jail free card. The market got to get out of jail free card today. And because of that, it's having this nice little rally here, off that what? Gap closure. Now, it was a very obvious gap closure, so it's not like it's something, that we didn't see coming. We were waiting for it, we planned for it, and we're benefiting off of it. So shout out to the market today, getting out of jail free card, get out of jail free card. They caught a bid today. Right, so that's a lot of people right there that was buying a lot of call on the way down, right? That was revenge trading the market, right? That's why they looked just like that little guy right there, eyes all blacked out, looking crazy, right? They kept revenge trading all the way down to the gap closure. Then they decided to say, "I'm not gonna fight the market, right?" Any longer with all these call buys, and they finally bought calls at the right time at the 443, and they got out of jail. Now they still down a lot of money, right? Right, but they did get, was able to catch a bid today. So again, shout out to everybody who was able to catch that and benefit off that bounce. All right. So again, what a great day, right? What a great 4 or 5 days of trading. Sharing it with you guys in real time, literally play for play. And just everybody making a little money, right? Catching the bag, right? Making a bag, catching a bid and getting paid, right? Getting paid. Right. So shout out to everybody who took advantage of those calls that we were kind of sharing with everybody and made money. All right, so that's it. So again, like I said, I didn't want to come on to be long. I wanted to come on and explain exactly what was my my thesis or my the ideal of why I was taking these trades and what we had already mapped out literally weeks in advance, because y'all know we plan weeks in advance. We don't just pop up and say, it's game on, let's do this and let's do that. We don't operate like that, right? We show up and show out weeks in advance, so that way we're not, confused about why, we do certain things or we take certain trades or we, whatever, right? So again, peace, power, and profit to everybody in that perspective. Salute to y'all. And so what I'll do, I did want to share this though, because again, y'all know I've been sharing a lot of the Maverick breakdowns about the market. Surrounding the inflation scenario, surrounding the idea of tapering and just a lot of stuff that's been going on very much, of interest that we need to kind of make sure we keep on our radar so we don't lose that fundamental perspective, because that obviously has a lot of merit over what the market's been trying to price in of late. And so I want to play this on the way out, the latest one that he did literally, I think, yesterday, concerning, of course, the high deal. With Apple had the event day. And so a lot of stuff, on top of that, we had, some the CPI data, right? CPI data that came out, Tuesday was no more than them cooking the books, right? We know clearly that the Feds, they cooked the books, right? Someone convinced me that they didn't, right? They cooked the books for the CPI data only for the fact that they can use that, right? They want to be able to use that to try to get, try to stop the market from falling, right? Well, guess what? It didn't work out, right? They tried, but it didn't work, right? So they was in the kitchen cooking, saying, "Oh, we only, lost 1/10 of a percent of a point, right? We came down basically 1/10 of a percent, right, on the inflation, right, on CPI." Now y'all know they're still leaving out food and gas off the CPI data. The two big expenses that everybody in the world have is food and fuel. Let me repeat: car fuel and stomach fuel. They left food off the CPI data and gas and fuel. If they added those in, CPI data 5.4 would have probably been around about 7 something, or at least 6. Let's say 6.5. They're clearly cooking the books right in front of everybody and thinking everybody is stupid. That shows you the level of the seriousness of these people, how they don't care for Main Street, and they just continue to keep pandering to Wall Street. But again, it didn't save the market. It got a little small bounce, and the market sold off and went lower, right? It deep dive and went lower. Can I get a hello there, right? So again, if they're going to hit the kitchen and get the cooking, right, we're not going to be fazed by it, right? We're not going to be, thrown off our thesis just because they want to play, pretty much play games, right? Right? So we're already on top of it. People like, man, we ain't nobody trusting that, right? Ain't nobody even buying that, right? So yeah, good try, right? But not on our watch, right? We stayed heavily committed to those puts, and they paid off again beautifully, right? So again, shout out to everybody who stayed the course, and who again benefited off being, patient, and reaping the benefit on the back end. All right, so that's it. So real quick, on the way out, real quick, let me play this here. This is, again, the breakdown from yesterday, going into today, about, what you want to look forward to, of course, on the inflation side of things. Jobless numbers coming up. Again, SEC chair, Gensler, this guy's a total dirtbag. He reminds me of Steve Mnuchin times 10, but of course at different, departments in the White House. But this guy here is a total dirtbag. He said nothing about Robert Kaplan and Rosenberg with their basically insider trading. These are Fed governors insider trading last year and into this year, trading the market while they're setting policy. But yet now he want to go after what? He want to go after people, GameStop and AMC. He want to go after the crypto market, right? But he don't want to go after Nancy Pelosi and Robert Kaplan and Rosenberg for insider trading. Couldn't make this stuff up, right? So these people are total dirtbags, right? And unless you know, again, what you're dealing with, high-level crooks. These are white-collar criminals at the highest level, right? Look, Martha Stewart ain't got nothing on these guys, right? Martha Stewart don't got nothing on these guys. She went to jail for what? For insider trading. These guys are worse than that, right? They about to take over, Bernie Madoff, right? They pulling the Bernie Madoff at the highest level. You working for the government, double dipping and stealing. I mean, the kind of stuff that you just like, you couldn't make. I mean, he's like you just sitting there like looking out the window like I be dang, right? And you be sitting out there looking like I be like they just getting away with this stuff like it ain't no tomorrow, huh? Okay, but y'all get it. But that's why we're not, we're not fooled, we're not fazed. We understand what's going on, and we're not going to be, misled, right? And we're going to stay true to what we have been training for this long. So that way, we can make sure that, we won't get sidetracked with all the fireworks going on in terms of the White House and Joe Biden policy with all this kind of, with the vaccine, all that kind of foolishness and whatever. That's another conversation for another day. We'll talk about that later on the next live stream I do, because that's another topic we need to discuss, right? Because came out today as well. I don't know if y'all saw that, but the FDA pushed back against the idea of having Pfizer be the candidate to provide, their booster shot for, for everybody needing that, right? They pushed back against that today. Now, we already know 2 top level FDA chair people left. They literally resigned and quit the FDA because they know that the White House pressured them in number one, giving Pfizer FDA approval, and then number 2, pushing for a booster shot. I repeat, 2 top level FDA chair people quit because they was not going to be unethically moved in a way to commit to unverified science and data at the expense of American people. They quit because they know, number one, FDA approval for Pfizer vaccine was unethical, rushed, and unscientific to the point where you had conclusive data. And then number 2, the idea that Pfizer also being given the green light to provide the booster shot for people who maybe may need that extra booster shot. And guess what? The old FDA chair, the ex-FDA chair, which is Scott Gottlieb, sits on Pfizer board. He's been the one working with Dr. Fauci and Joe Biden, pushing all this narrative. Couldn't make this stuff up. Couldn't make this stuff up. So again, I will if Will I Be Damned was a person, that's exactly what we sitting there looking at the White House right now, just shaking our head. Like, I be damned. Couldn't make this stuff up. Right? So again, y'all get it, but that's why we smart over here, and we stay, grounded, and we stay competent to the point where you're not gonna let us, just fall for anything, right? We don't fall for anything over here, right? We're very research orientated, and we understand that these people are, they're desperate, right? And desperate people do desperate things, and so you got to keep in mind, this is your health. This is your health on the line here. Whether you for, you're against, or neutral, this is your health. We know vaccines approvals typically take 3 to 4 to 6 years before they even get approval. And they finna give you in a year. And this thing is steady mutating. And you still got to take about 3 or 4, 5, well, it's about to be 4 shots, 4, 5 shots, which may translate to 6, 7, 8. Move on, brother Afurakan. So let me go to my man real quick. And so we'll close out with that, with him speaking on basically what happened far as the CPI data, what to look for, going into the end of the week, what obviously was going to happen today a little bit. Of course, this is his thesis. A lot of this stuff I share the same sentiment. Again, been watching this guy for a little while. Of course, a lot of this stuff, it just shows, a like minds think alike. So a lot of the stuff he do, I do a lot. I've been doing for years, with the means and the guilt. So he makes it very entertaining from that perspective. And we share a lot of the same talking points, right? So again, I like-minded people, right? All right. So shout out to everybody again. Excuse me, on the back side of Facebook, everybody, especially on my YouTube side, thank y'all for tuning in. Over Brandon in the building. Thank you for coming through today, over, right? And we'll play a little bit of this, these sound bites, if you will, of what, the CPI data really entail or detail, right? What they're not really telling you, the stuff that we know about, but this is what they really, right? What we're really going on with the CPI data, right? So I'm gonna cue this up, and again, thank y'all for your patience and tuning in, and for everybody who find value in what we do here. Shout out to y'all, salute to y'all. This channel would be nothing without you all. So this is the People's Channel, right? This is the People's Channel, and when we crank this baby up, we go to work over here, as we always do, right? So shout out to everybody who's a part of this, who patronage, who give it a view, a like, a share, and a subscribe, right? So thank you all, right? So let's cut this on. So let's get a little bit of that insight coming from the Maverick, right? So let me get my audio right. Let's this up like we did last time, right? All right, so let's get the, let's see. All right. Let's go. Microphone change. And let's go speaker change. All right. All right, yeah, so we're ready. We're ready to rock. All right. So let me get this solid over here, and we'll get on through this here. All right. So again, so the market's pulling back a little bit here. As you see there, the SPY got close to that 448.50 area. It came close. Matter of fact, real quick, let me share this real quick before I go to the Maverick here. Let me show you how, see, this is why we surges. This is why we surges, right? Joker's going to feel us for his over with, guys, right? And we just some humble people, right? We ain't nobody special, right? We don't, claim to be nobody special, but we love, what we do, right? Let me pull this up right here. Hold up. What do y'all see right there? What do y'all see right there? See that wick right there? We hit what? 448.41. So literally 9 points off that 440.50. Right? Sometimes markets don't always hit a complete 448.50. So that was enough right there. That's just basically Wall Street trying to get ahead of everybody else, and they sell early. So literally 9 pennies away from that resistance, and now it's pulling back. All I'm going to say is this is why we rock. This is why we hot. Did we not say that's going to be resistance? Now, it may bounce after hours, but as of now, it was clear what's going on there. Right? So I had a couple, already in play, insurance already in play to take profit at the maximum areas, right? So I was setting a little bit of them stop losses, right? While I was pulling up and checking those other ones. So, just been on fire. All I'm going to say, we've just been on fire the last 5 days. We've been killing it. Right? So locked in, how many sold? Let me see, how many sold? We sold, I wonder how many sold. Did 3 of them sell? Yep, three of them sold. They end up selling. So sometimes it's just going to sell. So three of them end up selling. Right? I put that stop loss right around 448, right? Just in case. And 3 of them sold. So we still got 2 of them left that we're going to hold until tomorrow, right? So shout out again for being, on top of our game, as always, making things happen. All right. So let's stop this and let's go over here. And we're going to watch the Maverick here. Couldn't make this stuff up, guys. Couldn't make this stuff up, right? Shout out over Chris. You already know it, man. Look, I'm just saying, man, salute to all you all because, we do this, guys. We do this. All right. So let me pull this up real quick. 1 second. All right, we'll close out with the brother the Maverick. All right. Let's see here. Let's see. 1 second. Yep, we got it. Okay. Again, thank y'all for y'all patience. And once this goes off, I'll come back and give some back end commentary. I'm gonna eat a late lunch by his plan, so forgive me. I haven't eaten. Right, that's what happens when you make a lot of money. Sometimes you forget that you got to eat. Right, right. Just get excited to start. Like, man, what lunch? Right. All right. So I'm gonna eat my lunch while this is playing, and so we get some good insight on the way out the back door here. All right. So all right. Here we go. All right. Awesome. All right.
CPI inflation cools off. Is it transitory? SEC Chairman Gary Gensler promises to regulate cryptos and SPACs someday. Apple's California streaming event is a total bust. All right. We start with the CPI, the Consumer Price Index. And while the reading showed that inflation continues to rise higher year over year and even month over month, consumers are paying higher prices. Yet the degree of the increase month over month was lower than expected. And this, of course, prompted the stock market, Wall Street, the Fed, and the like.
He says echoing. All right, so let me change it. Let me change the mic. 1 second. Sorry about that. I'm happy we caught that early too. So I want to make sure you guys have a clear clear perspective here. Testing. So we got that. Got that in place. All right. So let's see if this works here. Let me know if it's clear too once we cut it back on.
The Consumer Price Index, and while the reading showed that inflation continues to rise higher year over year and even month over month, consumers are paying higher prices. Yet the degree of the increase month over month was lower than expected. And this, of course, prompted the stock market, Wall Street, the Fed, and the likes to celebrate and rejoice that perhaps inflation is transitory. And we already have calls that inflation is peaking and it's gone, and the Fed was right, Jerome Powell was right, and there is no need for tapering after all. Meaning tapering the assets purchasing programs, aka the accommodation programs, the emergency accommodation programs that Wall Street have been under since the financial crisis over a decade ago. Just think about this. Wall Street has been under emergency accommodation by the Fed and the government since the '08 financial crisis. Meanwhile, us consumers, regular people, we actually have an emergency. It's called the pandemic, yet they have no problem in removing the evictions moratorium and cutting unemployment benefits for those who cannot find a job. So while the emergency for regular people is over, apparently the emergency for Wall Street continues to go on and on and on. The inflection point where the Fed have to taper and will be forced to remove the accommodation policy is when inflation rises beyond control. Then the Fed will have to initiate tightening monetary policy to control inflation, and this will be lethal to the stock market and perhaps the economy. And while Wall Street and the Fed were celebrating this morning the lower than expected inflation data, don't look for any signs of celebration in the small business world. Inflation pressures and resurgence in coronavirus cases due to the Delta variant are hampering the recovery of small businesses across the U.S., according to Goldman Sachs. You see, Goldman Sachs is doing all right because we have the Federal Reserve printing money out of thin air. This is the emergency accommodation, using that cash to grease up Goldman Sachs. So Goldman Sachs is fine, but who's there to accommodate small businesses in America? Small businesses are in a state of emergency. Who is there to help? Who is there to rescue small businesses? Who's there to level and even out the playing field between small businesses and large corporations, the likes of Amazon, Walmart, and Target? Nobody. But as we always know, the devil is always in the details. And when we read the CPI report out of the BLS, aka the kitchen, because the cooks give us the CPI number, aka the CPI number, which is in no way a true and accurate representation to the reality of inflation in the economy. Regardless, here are some important items in the CPI. And as you can see, the prices of beef went higher month over month by the tune of 2.3% from July to August. And according to the PPI, the leading indicator, this is the Producer Price Index, beef prices went up higher in the month of August by double digits, meaning that the inflation in ground beef prices and beef in general will continue to skyrocket higher, specifically when we get the CPI for this month of September. What about bacon? You like bacon? You might have noticed that you're paying more for it. And the reason is bacon, sausages all went higher month over month in August. But the good news is Frankfurters went down 8.3%. Why? Perhaps Delta, right? But Jerome Antoinette says, let them eat Frankfurters. Now, I want you to pay attention here, because why did the CPI go down? Did it go down because inflation is waning down, or did it go down due to transitory impacts of the rise in the Delta variant? For example, Frankfurters went down because nobody's going out to stadiums. What about coffee? Like coffee? I like coffee. I drink 4 cups a day. Well, coffee prices are going higher, and the reason is we got the news out of Brazil that the output will be bad due to frosts and other weather phenomenons. Matter of fact, coffee futures are trading significantly higher than the prices during the summer. And here's another one, perhaps an interesting one. Salad dressing went up 4% month over month. What happened here? But the good news is peanut butter, Skippies are down 2.8%. There you go. You can eat Frankfurters and peanut butter like a mice. And of course, here is why we call it the CP lie. It is in no way a true an accurate representation to what's going on in the economy right now. For example, we have a category, food at employee sites and schools, down 17% month over month. Why? Well, it's not a surprise. We have Delta shutting down schools and places of work, and therefore food at employee sites, the prices are down. Perhaps the food doesn't even exist. There's nobody there. Here's another one. Window coverings up 17.2% month over month. And the assumption here is perhaps the impacts of the Hurricane Ida. Perhaps people bought more window coverings. Who knows? And here it is, your chance in buying a suit. It's over now. Remember when men's suits were down? Well, men's suits were up 7.9% month over month. It's over, folks. Suits are expensive again, and the reason is we have the reopening, and prices of suits are going higher. We have JP Morgan, Goldman Sachs, all these banks want the workers back, and people are buying suits once again. But the good news is women's dresses, they're down 3.1%. Anybody going out today, tonight? Anytime? Nobody, right? No need to wear a dress at all. This is good news for the gents, huh? You buy your wife, your girlfriend a dress, you score a deal, and now you're the hero. But don't tell her that you got a steep discount for the dress. And then we have perhaps the most important category here, used cars and trucks. So new vehicles were up 1.2%, but used cars and trucks, this is the most important category, pushing inflation higher. And we assumed from the very beginning that this is transitory, but perhaps it's not going to be transitory. Now, month over month, used car prices were down 1.5%. But remember, year over year, used cars prices are still up 32%. And with the supply of new cars nowhere to be found, the chip shortage is still here and projected to go on all the way to 2022. The likelihood is the dip in used car prices will be transitory. Not the inflation, the dip will be transitory. And here it is, once again, skewing the reading of the CPI to show that inflation is dying or slowing down. Not true at all. Take a look at car and truck rental. The prices are down 8.5% month over month. Why? Delta, nobody's traveling anymore. But mind you, car and truck rental prices are up 52.6% year over year. What about airline tickets? Down 9.1% month over month. Why? You guessed it, Delta. But what happens when Delta is over and we're traveling once again? You got to remember this. What's important here is the aggregate demand, meaning absent of Delta, how many people would have traveled? And once Delta is over, how many people will travel again? And so long as the demand is hot, aggregate or non-aggregate, prices will continue to go higher. On top of that, understand that the airline business will suffer from high energy prices. They will pass the high energy cost all the way down to the end customer, meaning tickets prices will go up higher. So this month, it was an opportunity for you to buy and book flights at a cheaper rate because the likelihood is prices will rebound higher. But this is the moral of the story. When you have car rental prices down big, when you have lodging prices for hotels down big, when you have airlines tickets down big, when we have food at employee sites and schools down big, double digits, this is distorting the reading of the CPI.
Let's see. I have the echo cancellation on too, so that's, let me see. Let's see. It's the mic. 1 second, guys. Let me see if I can. Let me know if it's better or worse. Let's see. Back up a little bit.
The end customer, meaning tickets prices will go up higher. So this month, it was an opportunity for you to buy and book flights at a cheaper rate because the likelihood is prices will rebound higher. But this is the moral of the story. When you have car rental prices down big, when you have lodging prices for hotels down big, when you have airlines tickets down big,
Yeah, I
when
might
you
just
have
go to
food at
yeah, I'm
employee
gonna go to
sites
Best
and
Buy and go and
schools
get
down
a
big,
good setup.
double
I've been putting it
digits.
off for
This
the
is
longest.
distorting the reading of the CPI
All right.
as
You
if
say it's better
inflation
now?
is
Okay, awesome.
transitory. But when you look at the details, you realize that inflation is not transitory. What's transitory is the impact of delta, and then we will see prices rebounding higher again. Inflation will not stop. I repeat, it will not stop until the Fed starts tightening the monetary policy, or until inflation is finished with its course, doing all of the destruction it wants in the economy, and this will lead to a crash in the stock market and the economy. Because remember, inflation is like a tornado. The trick is to prevent the tornado from being born, so we can enjoy the breeze and the rain. But once inflation is born, once the tornado is here, it's gonna work its course until it's finished. It's a course of destruction. The only way to stop it at that point is to do it manually by using the nuclear button, meaning that the remedy is worse than the illness, or the cure is worse than the illness. Sometimes I have to balance the dumb side with the smart side. It depends on which one is talking. Anyhow, the nuclear approach to stop inflation from destroying the economy for a long period of time is to tighten the monetary policy. But tightening the monetary policy has severe ramifications. Number one, it will crash the stock market because, as I've showed you earlier in the video, not this video, but the markets analysis video that I released earlier, I showed you that the majority, almost the majority of stocks in this market are highly sensitive to the liquidity. If the liquidity is pulled away and the Fed starts to tighten to control inflation, it's good night, Irene, it's over. The stock market will crash like you have never seen before. But perhaps this is the remedy that we need to save the economy in the long term. And what was shocking to me today is I heard the good professor from Wharton, Professor Jeremy Siegel, who said that he believes that stocks are in the 8th inning before a correction. I say the correction already started, Professor, but most importantly, the professor made a stunning admission regarding the CPI. Unbelievable.
You know, as Jim has said, this is a challenging time of the year. I mean, I think, as one of your people on the show had said, that the inflation news, the report way underestimates what inflation we're going to see down the line. I mean, housing, they say, is up 3% year over year. Now, we know all the indices of housing are up 15 to 20%. They say rent is up 2% a year. I just checked nationwide rent. They're up 9 to 12% this year. It's the way the Bureau of Labor Statistics collects those data, very lagged. This is going to get into the data later on. But in the meantime, you know, Powell can say, you see, I'm right. It's temporary. No reason to rush a tapering. I think that's certainly, we saw that initial bullish move. As a result, I'm a little bit surprised that it faded, although...
So now we have the good Professor Siegel, who's known as a corporate propagandist for Wall Street, a stock pumper, now admitting and saying that the CPI distorts the facts. And the reality is inflation will continue to rise higher because this is a lagging indicator. And when we look at the rental prices for shelter, beef prices, fruits and vegetables prices, look at the PPI. This is the leading indicator, and it shows that inflation will continue to rise significantly higher. The next story of the day was the appearance of SEC Chairman Gary Gensler, who woke up from his coma, put a suit on, went to D.C. to testify, and then went home, took the suit off, and went back to sleep. We know that the SEC has been a dormant organization for years, but now it's in a coma, and this is leading the stock market to become an unregulated jungle. But if you thought that was bad, take a look at the crypto market. Scams all over the place, fraud all over the place, and who's there to regulate the crypto market? Who is there to regulate and protect investors from fraudulent IPOs and SPACs, aka scams, the likes of Shamath Palate Potato Tequila? The hope was it will be Gary Gensler, but Mr. Gensler decided to go to sleep just like his predecessor. And now we have SEC Chairman Gary Gensler telling lawmakers that he was taking a hard look at cryptocurrency trading platforms and firms that pay to execute individual investors' trades, aka pay for order flow, while also calling for more funding for regulatory agency. So Chairman Gensler says, we're going to look at, we're going to study, we're going to think about, but after that, we're not going to do anything. We're just going to go back to sleep. And what I find appalling is the fact that all of these politicians questioning SEC Chairman Gensler, they actually have a conflict of interest here because most of them, all of them matter of fact, own stocks. They own ETFs, they have retirement accounts, and they're enjoying this unregulated jungle fueled by the Fed's cocaine operation, which leading stocks to rise higher parabolically, out of whack, divorced from any fundamentals whatsoever. On top of that, we know that our beloved politicians have been doing insider trading. Yep, they've been busy day trading, buying call options based on insider information. So if the SEC chairman is about to regulate, he should start slapping handcuffs with all of these politicians in D.C. And perhaps he would slap handcuffs on Jerome Powell, the Federal Reserve, because the biggest market manipulator right now is the Fed. While he's at it, Gensler should slap handcuffs on his own hand. Perhaps he's also trading and YOLOing stocks. But perhaps what we were watching for is Gary Gensler's comments regarding the crypto market. Crypto investors, the tulip market, were a little nervous in the morning that perhaps Gary Gensler will say something crazy, that he might regulate the tulip market. I told you guys, rest assured, he's going to wake up from the coma, bark for about 5 minutes, and then he goes back to sleep again.
Is it your view that stable coins themselves can be securities?
I think it's, Senator, they may well be securities. As Thurgood Marshall wrote in the Reeves opinion, in defining the scope of the market that Congress, wished to regulate, Congress painted a broad brush. And it actually included about 35 different things inside the definition of a security in the 33 Act.
I've just got limited time here, so I acknowledge that. Here's my problem, though. I think what you just said was that they may be securities, or that some are securities. To me, a stable coin doesn't meet the second prong of the Howey test, that there has to be an expectation of profits from the investment. And so if it doesn't meet the Howey test, it looks to me like it's not a security.
And what they're talking about here is the Howey test and whether it is applicable to cryptos or not. And if it is, perhaps the SEC should start regulating cryptos. And the Howey test says an investment contract is number one, an investment of money. Is it really money or is it imaginary money? NFTs and tulips. I don't know. Number two, in a common enterprise. Number three, with the expectation of profit. Are we really expecting profits when we invest in tulips? Or are we just YOLOing, and when we lose 100% of our money, we take a screenshot, post it on Reddit, and brag about our losses? Number four is to be derived from the efforts of others. In this case, we know what the efforts of others mean. We have Reverend Elon pumping. We have Mama Kathy pumping. We have Jack Dorsey pumping. He might dump, but he's pumping for now. We have drunk Michael Saylor pumping. We have pumps all over the place. We have Tom Brady pumping. We have porn stars pumping. So perhaps this is what they mean by the efforts of others. I don't know. Here's another exchange with Gary Gensler. And this time around, it's about SPACs, aka scams.
What are the risks, Chair Gensler, what are the risks that the SPAC market has highlighted over the last year, and what can we do about it?
I think the special purpose acquisition companies, these blank check companies, the risk are to investors and the disclosure to the investors. I've asked staff to serve up recommendations that we could consider as a commission, but in essence, there's a lot of costs in these, and secondly, they usually have a 2-year fuse. And in that 2-year fuse, they try to go out and buy something. And a lot of the institutional investors, when that happens, sell. It's called a redemption right. And retail investors are often left holding the dilution or the significant cost of the bankers and the promoters. So we're looking at greater disclosures and also looking at if there's inherent conflicts along the way. And then again, try to put this out to notice and comment and rulemaking.
And of course, Gary Gensler promised that he will look at, he will examine, he will consider, he will study, he will look at, and then he will go back to sleep. Once again, ladies and gentlemen, the market is an unregulated jungle. Pumps and dumps all over the place, scams using options, business as usual. Moving on to the last story of the day, perhaps the most important event of the day, the California streaming from Apple Incorporated, aka the iMob. Now, we've talked about the iMob in details in last night's video. This company has ceased to innovate at all, and we knew ahead of time that there isn't going to be an iCar, no new innovations at all. The best you can hope for is new shades of purple, perhaps orange, new colors, that kind of stuff. And of course, the iMob did not disappoint our expectations, but perhaps even more important is the pattern. Buy the rumor, sell the news when it comes to the iMob and their events. Us seasoned investors, we already knew that ahead of time, and we started shorting Apple last week. But of course, there are those who bought Apple in anticipation of the iMob event, California streaming. They were disappointed that the stock sold off. On top of the historical pattern, we have disappointing, lackluster event here that pretty much produced nothing. There is no tangible upgrade whatsoever. On top of that, we don't have any release dates, by the way. The iMob is just throwing products out of thin air. We're going to do this, we're going to do that, and the products will be revealed someday. Apple announces new iPad and iPad mini models. Oh, wow. That's the innovation right there. Let's see what's in this new, historic 21st century innovation. The new 5G iPad mini has a 12 megapixel back camera, 12 megapixel front ultra wide camera, and the ability to record in 4K. It also supports the Apple Pencil. Wow. All of this shit was already available in Android devices long time ago. Perhaps this is it. This is the game changer. Apple's 6th generation iPad mini gets a USB-C and an all-screen design. Oh, wow. And then the iMob announced the iWatch, or as they call it, Watch 7, with, wait for it, a full keyboard. Wow. Wow, that's the new thing, right? Look at this keyboard, beautiful. The only problem is when I press G, I'm gonna press the whole screen, and yeah, that's not gonna work. Okay, what else? The new Apple Watch Series 7 is here. It has improved charging. Wow, 20% more screen real estate, still water resistant. Oh, how generous of them. And here it is. New colors, including Starlight, whatever that is. It is made out of a 100% recycled aluminum case. The pricing starts at $399. The Series 7 has the largest, most advanced display ever. It fits 50% more text on screen than the Series 6. Plus, it is crack resistant and dust resistant. Wow. Look at the dust. You gotta buy this. How could you resist? How could you resist your watch resisting dust? And here's the full pricing, by the way. If you're a bum, you can buy the iWatch 3, which starts at $199. If you are not so bummy, you can buy the iWatch SE for $279. And if you're a sheep, a cult member of Apple, you can buy the new one, the improved iWatch Series 7 for $399. You can enjoy the full keyboard that you will never use. And of course, what is the release date for this iWatch? Later this fall, or later this spring, or this summer, or fill in the blank. TBD. But perhaps the most anticipated revelation was the announcement of the iPhone 13, the revolutionary, the game-changing, high-tech, innovative device, the iPhone 13. And here it is. iPhone 13 Pro has a new Super Retina XDR crispy clear liquid drop display and 120 Hz display, which by the way Android devices had a long time ago. Wow, that's the one, right? Apple event introducing iPhone 13 Pro. Ceramic shield glass on front, oh how generous of them. IP68 water resistance, wow. Redesigned interior to support the new camera system and a bigger battery, wow. Oh. A15 Bionic chip, New 5-core GPU, Super Retina Liquid Crisp Drop XDR display, the best ever, and Pro Motion, whatever that is. Oh, wow. And of course, the iPhone will cost you $699 for the mini version if you're a bum. But if you're not so bum, you can buy the iPhone 13 for $799. And here's the moral of the story, folks. A big nothing. A total jerk-off. A total bust. Nothing tangible, nothing new, nothing game-changing at all. Just a bunch of new garbage, hoping that the sheepies will buy and upgrade for nothing, and the cycle goes on and on and on. Which makes the shakedown revenue, the services revenue for Apple, ever more important, because there is no growth, there is no innovation in the hardware business, so you have to rely on the services business for growth, which we now know 70% of the total revenue from the services segment, aka services, is actually the shakedown money. You pay us the rent, the 30%, or we crack your kneecaps, we ban you from the store. Now what happens when we have a judge that allows, or allowed already, app developers to add buttons and links, and even incentivize customers to use alternative payment methods, cutting the IMOB out of the 30%. We have a game changer here. We have a big problem for the largest stock in the market. If Apple goes down, so will the market. Folks, this is all I got for you for now. Thank you for listening. Thank you for watching. Good night.
All right. We're getting it in, right? Late lunch. Very late lunch. Forgive me. Let's see. All right, so. All right, yeah, so we're good. All right. So let me cut that. Hold on, what's that? Oh. All right, there we go. All right, so again, so a lot out of that, right? Weirdly, so like I said, I mean, I like minds think alike, man. Again, me and this guy, well, it's a lot of us out here who think like that, right? We're realists, right? We're purists from the aspect that we like to stay, grounded in reality. So when we put out a thesis or a sound bite or an opinion, whatever, we're doing it with a level of care to the fact that there's different people from different levels in their quest and learning how to become thorough in the markets. But just knowing and learning how to sift through all the, again, the like Wall Street, they say, there's a lot of red tape in Washington. There's also a lot of red tape, right, in Wall Street, right, surrounding Wall Street. But learn how to sift through all that to get to the gist of what you need to know as an investor. I think that's where, a lot of us, we pride ourselves in that perspective because, again, this is a real world applications perspective where performance dictates your growth, right? You can't fake it over here, right? That's why I love this stuff. This right here separates those who are about that life as opposed to those who, talk that life, right? You have to be able to perform, right? You have to be a student of the game. You have to study. You have to put in that work. And the end result will be what? You're receiving profit or, you're having a succession of losses that wasn't necessarily warrant. It's just that, you didn't stick to your discipline. You didn't stick to your game plan or whatever, right? You didn't, make a clear goal and hold yourself accountable to it. So in the process of going through the, that kind of, monotonous aspect of learning how to be very consistent in the markets, well, you will gain a lot through doing a lot of the small things over and over and over, right? We call it like, repetition becomes repertoire, right? That's one of our sayings, right? Repetition becomes repertoire. Well, that's what makes you, grounded in this. That's what keeps you, it keeps you hungry in this. right? Because a lot of stuff that you're going to deal with in the markets, it's not really truly rocket science, you know, in the aspect of what a lot of people from the outside look in and think it is. It really isn't. It's learning how to, you know, it really, again, assess risk, right? And learning how to read the room in essence, right? The bulls and the bears, right? You know, how are people feeling about the markets, right? That sentiment, investor sentiment, right? The technicals pretty much take care of themselves until it does not. The fundamentals pretty much take care of itself until it does not, right? But everything, you know, behind the scenes is what we want to really focus on, right? And so, you know, when you put all that stuff together, it really, again, provides you the blueprint to make the proper you know, steps and have a solid methodology that you may use to become more fluid and making good decisions in the markets that will eventually culminate into you being able to, you know, succeed more than, let's say, you know, your failures, right? So don't cheat yourself is my point, right? Said a whole lot, but don't cheat yourself, right? Don't try to take the shortcut in this. Why? Because number one, the market's not going anywhere. And then number two, it's a marathon, not a sprint. You got time. If paper trading is a you know, a great perspective to use to kind of get to a place of learning how to assess risk without having to lose capital, do it. Right? No one's looking over your shoulder and say, "Oh man, you ain't doing the real money. You ain't put $1,000 out there today." Look, this is not that kind of part over here. Right? This is not that kind of part over here. It's you against the market. Right? So you have to make sure, again, that you're prepared and you move within the rules of engagements, the rules of engagement, like we always discuss on here, to the effect that you're making good, conscious decisions. Again, conscious decisions. Not, you know, this trade seems to be like it may work out. No, again, make it make sense. Put it on paper. What's your thesis here? Right? What are your goals? What's you know, what are your targets? You know, where's your stop loss going to be placed? Right? If not this, but what? You know, again, really make it again, like doing code. It's like doing coding, right? Put it into perspective so you can have a lot of fail-safe mechanisms in play, right? And then go out there, execute as you may, right? So that's why I say don't skip the fundamental side of learning this too, because a lot of people will try to push you to understand the technicals only, because they may be strong at that, and there's nothing wrong with that. But my mentality is that no, we're going to learn everything. We're going to learn everything, right? All the fundamental, you know, tidbits and the jargons and you know and you know the you know all the I should say the talking points that you get out of Wall Street a lot, and the TV pundits that cover them, and knowing when they kind of spot, you know, BS from reality, right? What paper value is really a great catalyst or not for a particular stock. Of course, the Apple event yesterday was a great what? Nothing burger. We talked about it before the event happened. Like, yeah, it's probably gonna be nothing burger, because we, you know, chances are when a company got something revolutionary, there will be a track record that will precede it. You just saw a lot of commercials, a lot of stuff coming out about Apple that was being leaked that is like, oh, this new iPhone finna be about that life. We got none of that. And number two, we understood that the cost of raw goods and services are up because of commodity inflation, right? So they can only do so much because there's chip shortages, there's stagnant, you know, supply chains around the globe because of COVID. Look, they're only going to be able to do so much. Matter of fact, their main facility, a manufacturing facility in Wuhan, China, go figure, right? Where the virus started, Foxconn, is going through a lot of problems right now. And they're trying to share production to do other projects that they have underneath their roof for other businesses, so they can't devote all their attention to Apple. I mean, so it's a lot of stuff, right? Again, once you learn to connect the dots, you'll know how to make more strategic plays, right? You'll know how to put together a solid trade based upon, again, learning how to, again, fill out the entire landscape first, right? Again, more than just the charts, more than just the fundamental story, right? understanding what the investors feeling like right now because of what, you know, a lot of things surrounding the overall market that have people scared. So we use that market psychology thing for a reason. At the point that matter of fact, at the point where Apple dropped that iPhone yesterday, the market was sitting at close to that around in the panic area. And they was hoping, you know, at the panic area, Apple phone release will be enough to drive the market back to a form of pessimism, right? Back to that equilibrium line, but it did not, right? It did not. It drove the market down to capitulation, and then from there, right down into anger. And that's when we bounce and fill the gap, of course, and then the market bounced. But everybody at that point started buying puts, though, that were buying calls up here. Calls all the way down from denial, fear, pessimism, panic, capitulation. And then when it hit anger, when they hit the anger point where they were just like, man, this is crazy, then they started buying puts. And guess what the market did today? It bounced on them. So now their puts are underwater because they waited to buy puts at denial, fear, pessimism, panic, and scalping at capitulation. Right? Could make this stuff up. And I know it to be true. Why? Because I'm in a lot of different rooms and people have sent me messages and like, man, I was trying to do this and that. I don't know what I did wrong. And that. Whoa. It's okay, right? But take your time. Realize that you have to be very, confident in what you do before you do it. Why? Because guessing alone is not enough. Guessing alone is not enough, right? And it's not worth losing money behind, especially if it's like, a decent amount of money where you could just risk it like that, right? So we got to get our risk profile in check. We need to understand good risk versus reward ratios. Again, we may need to go back and revisit that, being able to kind of stay within that, maybe, 3 for 1, maybe. That might be good for a lot of people. 4 for 1, maybe. If you have a good, track record and history in the markets, but we want to make sure we can find that risk versus reward ratio to the point where we know we're not just out there just putting money out there and just chancing it, right? So that means maybe that's something that we'll discuss on our next scenario or next session, whatever, where that aspect of the risk versus reward. Because again, y'all know I love a good risk versus reward ratio. It's no secret, right? And I've been doing this for quite a while and learning how to take a little bit and grow it, right? This going back some years, I was really good at dip buying and learning how to, catch those right scenarios, right? Through an options earnings play or just, nice little, homework breakdown of a stock, before it had a PDUFA date release of, FDA news or anything like that. I used to be on top of those stocks, playing chess, not checkers, right? Front running them, right? So, maybe we need to revisit. But nonetheless, again, we're in that on like we always do, because this is an educational based, platform over here. Everything we do has to have, has to have, again, truth, merit, right? It has to have continuity, right? The idea that you cannot skip a lot of the prerequisites in order to be solid at this. You have to put in the work, right? You have to put in the work, studying on your free time, getting around other people who do this at a point where you'll now have at least an echo chamber of solid people that you can build off of, right? In terms of asking them questions and all those pertinence to that nature, right? So you'll constantly, have people that you can fall back on, not feel like you kind of an alien to people who have no clue about this, right? And it's like asking them, hey, how do you, determine what rocket fuel for, this, that, and the third. Now, be around people who have a like-minded interest as you, basically, is my point, right? And so once you start getting your, hands dirty a little bit, you got to understand, in order for you to be successful as a trader, number one, above all things, you always got to have a plan. Some things you can just Kentucky wind it, and get lucky, toss a couple things out there based upon momentum trades and things that just happen out of the blue and news just cause the market to kind of make a big move directionally in one way or the other. You can just say, okay, I buy a position going that way. But that's only a small fraction of what the market really entails. A lot of what we know as the market value is dictated by you being able to set a plan and plan ahead of expected moves, of expected opportunities, right? Understanding peak to trough, when the stock is in a channel, when it's accumulating, consolidating, when it's going into a rising wedge, when it's going into a falling wedge, bear pennant, bull pennant, bull flag, bear flag, right, et cetera, et cetera. What do you do in those moments? Is it going into earnings? Do they have a special dividend they just announced? All right. Again, there's so many different things out there. But above all, have a plan. And that plan obviously includes an entry plan. Well, let me back all the way up. It requires a pre-scouting plan, then an entry plan, and then an exit plan. Right? You cannot skip those three things. You got to have a great understanding of what you're getting into before you get into it, so the market do not catch you off guard. All right? And when those things align, then you move forward. So number one, right? Set a plan, key to all successful traders, right? First thing you got to ask yourself, especially if you day trading or even you swing trading or just even putting together an investment thesis, right? You need to understand there's a lot of different things that move the markets on a daily basis. One of them is volatility, right? Well, for a lot of traders, we love volatility. Why? Because that means the market is actually moving. That means we have expansion. We have divergence from what we call standard deviations and stuff like that. Where the market is opening it up, right? Causing a lot of people who were just comfortable kind of sitting in a small channel to now basically retool their game plan. Either stay in, buy a little on the dip, or sell into some of the spikes, if they go along, right? Nonetheless, volatility is a good thing. Love it. Get used to it, because that's where the day traders make their money, right? When the markets are volatile and it's moving, moving great, lengths and in the expectation value. So you got to ask yourself, are you trading during volatility, market volatility? If you're a person who likes low beta stocks that trade, very close to standard deviation values and don't have a lot of wicked moves throughout the day, then of course when volatility actually hits your stock or the market as a whole and your stock is in the crossfire, you need to understand how to position yourself, in or around that marketplace. Second, how long will you hold your trades? Is it a day trade, intraday, swing trade, option-based trade that gives you a week contract at 2 weeks, 3 weeks, a month, a leap, beyond 6 months or more, whatever, 3 months or more, right? How long do you plan on holding it? And that's based upon you having a goal of when you would like to take profit. I repeat, it's about you having a goal to realize when do you want to take profit. That's literally what you trade for. At some point, you want to take profit. You want to make some money, right? So understanding that is very paramount to you understanding, okay, I'm not just in this to see, hoping that this thing just going to go straight up and never fail, never come down, right? Although it will over long term if it's a growth stock, but you got to learn how to pay yourself in between some of those good breakout moments too. So, knowing before you get into a trade, what's your overall, hold mechanism, right? Or hold breaking point. It's good to know what that is before you enter that trade. All right. Number 3, what are your trading goals? Right? What are your trading goals? Are you planning to a certain news catalyst, FDA approval? Again, a price point target, right? I think this stock gonna go to this price, right? If we get up near that price, okay, I'll take some gains up the table at that point. Excuse me, et cetera, right? You got to know these things, right? It's important because you're mapping out, growth in terms of being able to monitor your money, right? You're putting your money to work. So you need to know exactly, all the rules worth knowing, all the parameters that you may face, variables, etc.,
so you can give your money the best playing field that it can operate underneath or inside of, right? So obviously have a goal before you get into any stock. Even if you finna get into a momentum trade that's moving very fast, you still got to have a goal, but you still got to know, where support resistance. Where do you think about taking? Where are you gonna think about taking profit at? Right? Where you gonna set the stop loss at? It's not just get in and just hope it just keep going up forever and you just forget about it. Wake up next day, oh, it's even up more, and then that's just that. That's not how this stuff works, right? That is not how this stuff works, right? So just keep that in mind, right? So coming down to the bottom, right? After you kind of establish that trading plan, right? Now you need to realize, again, what time of day are you going to be trading? There's different time zones of the day. We broke this down several times, right? Rush hour traffic, kind of cruise time, lunch time, and then kind of power, end of the day, power hour, right? When the market is most volatile during those time frames, when it's the market most kind of, dormant during those time frames. And, you got to understand those things for a reason, because if you're expecting a lot of expansion during a time of the market when it's kind of very reserved and already made this big move, then you've already missed the party. So different time zones throughout the day gives you certain, a certain echelon of traders, right? A lot of the high momentum based traders, they're already in between 9:30, 10 o'clock, 10:30. They're done for the day. They're done for the day, right? They're on the golf course at the beach, catching a plane, whatever. They're done. They hit their targets, their goals, if they hit them, and then they're done, right? So you got to realize that the market does move just like you was on a job, right? It has certain aspects of when when that environment is popping, and when there's times when it may be not, right? So unless it's just a steady stream of volatility, because we have like a black swan event or something major, then yeah, you got unlimited volatility. That's always a positive, right? Especially if you're a day trader, because you're going to make a ton of money if you're always on the right side of the trade. All right. And so fifth, what stocks are you trading? That matters. Some stocks are not characteristic. Their characteristics are obviously different than others. So they only have a certain, I should say, a personality to them that makes that play, from the jump before you even get into it, you already know what you're going to expect from it. It may be a stock that don't hold its gains very well. It goes up, but never holds that growth that it got throughout the day. It sells off in the day. It might be a type of stock that, moves very fast on low volume because of what? It has a low float, right? Low float stocks obviously doesn't take a whole lot of volume to move them, right? Especially if they have a high or mid value of short entries on top of it, that causes those shorts to get squeezed in an event that you have any abnormal volume coming in. And guess what? Before you know it, the stock may be trading at, $5, and now it's up to like what? 13, 14, 15 bucks before you know it. Because it's a low float, right? Moving off technicals or just being off a newsreel, but those things do matter. So understanding all those small back end parameters of a stock is important. Float, outstanding shares, short interest, short volume, daily average volume. Again, then going into the aspect of what, in a particular catalyst or news release or press release coming, in it, ahead of the stock, all those different things. Of course, most of you guys are not, new to that aspect of a stock, but I'm speaking to people as if they're, in a layman mindset. I don't want to, not reach a lot of people who are still somewhat on the sideline. I want to kind of give them exactly what we look at before we get into stocks and what we're thinking about, right? So it's important to understand what stocks are you trading. And then lastly, how much risk, right? Very important, right? Life is about risk management. I repeat, life is about risk management. Do it thorough now so you don't have to worry about cleaning up after yourself later. Do it thoroughly now so you don't have to worry about cleaning after yourself later. So management. Run your business, your online trading business, the same way you was running a brick and mortar. Understand the risks that are involved and move accordingly. If you don't, it's going to be lights out. right? It's going to be a lot of sleepless nights, right? So you may as well go ahead and start understanding that you have to have a risk profile in play, knowing what your threshold is, what you're willing to lose, what you're willing to walk away from, and what you're willing to accept sometimes in terms of even small aspects of profit gains, and never get greedy, right? Because what? Bulls make money, bears make money, and pigs get slaughtered. And then the fourth one, chickens get plucked, right? Chickens get plucked, right? So bulls make money, bears make money, pigs get slaughtered. You get greedy, you make money and turn around and give it all back, right? Because you just caught up, like a deer in the headlights, right? Delusion of grandeur. It's just going to keep going up or it's going to keep going down. You got to have buy zones, sell zones in play. You got to have goals. You got to understand support resistance for a reason. You can't just jump out there and be like, I think it's going to do this. Or you can't ask somebody else what they think about a stock, but yet you still don't take that same information and then go map out what may work for you, because the way you look at the stock may be different than how they look at the stock. A setup, breakdown, or whatever. You have to realize that this is a game of what? Self-actualization, right? You have to literally, take the bull by the horns from your perspective, your visual, vocal point, vantage point, and make it, make sense to you personally. Find your own niche or own niche, but steal from everybody, right? We say that a lot for a reason, because you have to be comfortable to be able to deal with volatility. If you're not a volatility-minded person where you can't deal with all that movement, then find stocks that are more low beta, right? Don't trade a whole lot of volatility throughout, its perspective. And then kind of move within the confinement of what you were capable of. Be a 1 minute chart, 5 minute chart, 15, 10, 30-minute chart perspectives, 33 tick. If you really about that life, right? That's what that real, about the life trader, especially on the Forex side, those tick charts, man, works wonders. You got a lot of big money on the line, right? But again, find your comfort zone basically, right? How much risk are you willing to put per trade? Again, I've shown you that in the right mindset, I repeat, the right mindset, you could take a little piece of change and do a little something strange with it, right? We've done that over the past, 5 days, right? We took basically total maybe $210, and now we're sitting at around about $4,500 in about 5 days. 210 into 4,500. That don't mean it always happens that way. That means being in the right place at the right time, understanding your risk profile, you can make those things happen too. Why? Because the rules of engagement here are not limited to the ideal of how much money you can make. Again, you may start with a certain amount, but that doesn't mean that you only 100% that value what you got. No, you could 200% it, 300% it, 500% it, right? It's not quid pro quo from that perspective of equal or greater, or equal or the same exchange, right? You literally get a chance to take it, as high as you allow your patience and your study habits, your methodology to lead you to a bigger bag. Right. So we've proven that several times, and we will continuously make that a point of our reference, that we realize that if I put myself in the right places at the right time, ahead of time, or even during moments of opportunity, I can benefit if I just make sure I'm on point with everything that I put forth in terms of my study, back testing the charts, and understanding the fundamental counts, if there is one or not, what the market sentiment feels like that day overall, and then go out there and make things happen. All right. So again, just want to make sure I set that in motion, because a lot of times it get lost in the sauce, because people will ask you, how you was able to do this and what you did to do that. Well, literally, this is the breakdown that a lot of us go through before we get into any trade. If this kind of stuff kind of makes you feel like, oh man, that's a whole lot, then, again, maybe, especially day trade scenario, definitely ain't gonna work. Stick to long-term thesis-minded investing, meaning find those marquee names, best in breed, add money to them on anytime you have, significant dips or pullbacks around 5 to 10%, and let your money just keep working for you on the long side. And a growth stock, of course, a stock that has potential to grow. And then eventually maybe you'll come around to maybe trying a little bit of, option trading or day trade perspective just in case. Again, it's all relevant at the end of the day. It's price action. It's what people are willing to pay for, for a certain stock. I mean, AMC, GameStop are not fundamental stories. They're horrible in business right now. But yeah, both of their stocks are sitting at, up, one of them is up like 2,300%, and the other one is up like near 500% since, summer of last year. Let that marinate. That's less than 1 year, well, a little bit over a year. And these stocks are up 500%, 2,300% respectively on no fundamental news. Meaning their business models are basically in trouble. But yet they have investors who believe in the idea that this is something that they can get behind for weird reasons, but it does not matter. Why? Because it's legal nonetheless. It's legal nonetheless. Until someone try to say that it's illegal to have a liking for a certain stock, right? They can't bar you from being in the stock that you may like. Right? I like the stock, right? If you like the stock, then hey, that's your risk profile. You never invest more than you have willing to lose. Okay, you understand. Let's go. All right, so it all makes sense. All right, so that's it. So again, I want to leave you guys on that. Again, it's good to have that kind of good old school safety briefing, as they call it back in the old days, especially if you've been in the military, right? And nothing better than a good old safety briefing, right? You need these safety briefings often because a lot of times you will find yourself just out there chasing a lot of stuff, not adhering to a lot of your disciplinary, guidelines and rules that you have set for yourself, and not protecting your capital, right? And y'all already know I don't do signal services. I don't give out stock picks. I just talk about a lot of different stocks that I have an interest in. I lay out the game plan. If you so choose to take them trades, that's up to you. But that same level of methodology can be used in the other plays, right? So realize that, we're just trying to give people that kind of understanding so that way the education will precede you and not the value that you need to be dependent on somebody giving you a stock pick. And by the nature that I talk about certain stocks and I break them down, in detail, in some cases, a lot of times that's me somewhat like hint, hint, wink, wink, right? As we just did, before, we got to this point of the show about the S&P 500, and some other stocks and whatever, AMC, whatever, right? So, it's part of the game. But we want to make sure we build really good fishermen over here, right? Really good fishermen over here. Because if you teach a man how to fish, he'll eat for a lifetime. If you keep giving him fish, he's only going to be as relevant as the next fish that he's waiting to get in his belly. If that fish don't come, he's going to starve to death. Right? He's going to starve to death. Right? And we don't want to, set that kind of energy in motion where people are dependent upon, you just feeding them. Right? Because, accountability has to come into place at some point if you want to be able to transfer this skill onto somebody else at some point. All right. So that's it. So again, I'm gonna leave it at that, guys. Thank y'all for tuning in again. It was a short sound bite, but again, like always, we try to bring content and context, right? Content and context, all in one breath. So we are making, again, really good decisions going forward in our investment thesis, in our trading thesis, or just our overall understanding how business works, especially from the eyes of an investor, right? Through the eyes of an investor, right? Because all this stuff has real world application value to it, right? That's why I love it. All right. So that's it, guys. So I'm going to leave it at that. Again, thank y'all for tuning in. I think Sister Monica doing the show tonight. So just keep, stay tuned, right? So, every Wednesday we typically do the Urban Economic Empowerment Show on the Dagger Squad channel, typically around 6 p.m. So just keep your eye on, out for that, just in case Sister Monica goes live, right? So again, a lot of good information comes out of that every Wednesday with, helping your financial literacy prowess to kind of really expand from all things business related, right? From investing to business ownership to business management to, a lot of myriad of different things that come along with keeping people up to speed with what's going on for us, government policies, procedures, et cetera, et cetera. Right? It's weird too because y'all know we did that show. Just think about that. We did that series concerning student loans. I think we did that breakdown maybe last year, around the summer of last year. And just literally a couple of days ago, I get, the acknowledgement by the Department of Education that they're going to discharge my student loans. And I was like, okay, all right, like seriously, y'all, okay, everything went well, check that, okay. So that's why I love that of being a part of that, because we're trying to constantly keep people excited and involved and engaged in a lot of things that can help their back end, right, benefit themselves financially, keeping their their business healthy, so to speak, right? Their business dealings healthy, right? Be it if you try to improve your credit or whatever. And so you got to know what's going on in and around you if you're going to be a part of this system called capitalism and American business as a whole, right? So student loans is something that follow you to death, right? So a lot of people may be in a position where they may qualify for the Borrowers Defense Act, where you can get your student loan forgiven or a portion of it. Some of you guys don't know about a lot of these government oversight jobs where you take those positions, and by the value that you're there for a certain time frame, the government will, from that point, forgive your student loans. There's a lot of stuff like that out there, but a lot of people, they just don't know. They're just comfortable being on the hamster wheel. They're paying and just hoping that one day they get from underneath that mountain of student loan debt. Again, that's the only debt that'll follow you around the world, right? It'll follow you to your grave. You can get forgiveness for buying a house, right, which costs more than that of a student loan for most people, right? We're talking about $250,000, $300,000, $1 million for a house. You just file what? Chapter 11 bankruptcy. Well, try to file Chapter 11 bankruptcy on student loans, right? Good luck with that, right? They will take your passport if you default on a student loan. They will take your passport. You won't even be able to leave out the country. And if you outside the country and you default on your student loan, they'll come extradite you. They'll come get you and bring you back for a student loan. It's a federal loan. So they look at it like you're breaking a federal law. Couldn't make this stuff up. But you can default on a house. You can default on cars. You can default on credit cards. All this stuff, some of those payments or values are higher than the value of your student loan. But the one thing they would not let you skate on is that student loan. They will come get you. Right? They will come get you. Right? So again, tune in. Anytime you see us doing something on student loans, not that we claim to be experts. We just dealing with real world situation. We share all of our stuff. We were transparent. When we did those things, we were transparent. I showed y'all my stereo when I did it, my form, my Borrowers Defense form that I filled out. We went through the whole nine, right? And I set it in, right? And lo and behold, whatever. Took a little minute, but here we are. A couple days ago, I got the email from the Department of Education. Just letting you know, Mr. Willis, some of all your student loans will be discharged. And in my case, all of them will be because they're under the same service provider. So they discharged all my loans, my student loans. I had like what, about $18,000 to $20,000 left. No, it was like $18,700. I had $18,700 left. I mean, of course, people like, well, you could have been paid off, man. You didn't start market, but y'all understand this stuff. It's good on your credit. If your payments are current and you don't have any defaults, it's good for your credit report. Don't get it twisted. It's good to have that on your credit report if it's current and not in default status or whatever. So it's a long length of credit history, right? So of course, like anything, you pay it to keep that aspect, the longevity of credit history on your report. That it looks good. But in the same breath, when it gets paid all the way off, or in my case, if it gets discharged, it looks even better because now that's a tax relief, or I should say a debt relief removed in a way where it instantly going to give you 70, 80 to 100 points on your credit score, right? I was telling that Sister Monica, I said, man, my credit score should maybe jump to like 900. Once it come out, I'm gonna get a 900 credit score. They didn't even thing called 900, but they gonna give me a 900 after this thing leave, right? But no, but seriously. So again, a lot of this stuff, man. Look, we all try to make sure we stay on top of stuff like this for a reason and share that across the gauntlet, because that's what we're here for, to help each and every one of us, stay sharp. Again, still sharp and still, right? So that's why you want to be around people who move, in that likeness. He was trying to do something to change the bottom line, your bottom line, right? Financially, not just a whole lot of talking about a whole lot of stuff throughout the day, burning time, scrolling all day. No, we're gonna be working. We're gonna be somewhere working, right? Or putting together at least a thesis to kind of get to the bag, right? Or eliminate some debt, right? All right, or eliminate some debt. So, shout out to the ancestors for helping me get that, that little portion of lingering last little bit of debt out of my life, student loan. Look, as they say, wash my hands, put a little hand sanitizer on everything. I see y'all in the Department of Education. It's been fun, but a brother got to run, right? Y'all can take all them, the rest of them debts, that 18 grand, whatever, and y'all can whatever, right? So I'm excited for that, and I'm humbled by it. And again, if you guys want information on that, we can help you out. We know exactly all the forms. We got everything downloaded. We got the website to go to check if your program or school or whatever is up for that value to have it loan discharge or loan disbursement value. We can give you all that information. We already have, again, like I say, about 3 different shows we did on the Dagger Squad channel on the Urban Economic Empowerment Show, where we broke this stuff down. We literally went through this stuff for hours. We were sitting there going through almost every school, the programs, all that, right? So definitely check that out if you're not familiar with it, or if you want questions, we can direct you where to go, right? So we do more than just stocks, right? All right, so get excited. So that's it, guys. So let me get out of here, guys. Thank y'all for tuning in again. Thank y'all for being patient as always. Don't forget to like, share, subscribe. Until next time, guys, we'll see you back in the saddle, guys. Be confident. I'm going to repeat. Be confident in what you're doing in this market much as possible. I can't stress that enough, right? Be confident, right? Because this is the game of, you taking your financial, future by the hand and walking it through, Gravy Valley biscuit wheels, right? That's what we hope to be in every day. Gravy Valley biscuit wheels. So, you can really reap the benefit of your hard work, right? And again, from there, we'll just let the history catapult us into higher highs and different tax brackets and bigger bags in the bank account. That actually accrues interest, because we know we don't leave money in a savings account unless it's going to grow interest. All right, we're going to keep it in the ETF or mutual fund or some kind of index that pays at least about anything bigger than 3 to 4% yield. Right, we don't play that just sitting on money stuff. That's dumb. Cash is trash. As the great Ray Dalio has said, cash is trash. Being in cash without having it growing money is trash. Right, that is a bad business plan. Right, so put those $5 to work. Put those $10 to work. Buy fractional shares of Apple, Netflix, whatever stock you like. Right, and let that money grow over time. All right, so thank y'all for tuning in. So all my family over here on the YouTube side, thank y'all for tuning in. So over Mathis, say where did you get a wristband? Oh, at the our events that we do, our country's events. One of my brother, I actually got his business card. I have to pull it up, but yeah, my brother, he make these from scratch, a Jamaican brother, right? I got several of them actually, right? I've been dealing with this guy for years too. But yeah, so this was the first one that I bought from him, was this one here. The one with the unk on it, right? It's real leather. It's 100% real leather, of course, so it's the real deal. But he make them all by hand. So this is the first one I bought, and I saw him at the where we went. We went to the it was the I think a lead bar. It was a lead bar festival in Richmond, Virginia, and he was there, right? He was there. I think many other brothers like Irritated Genie, those guys were there. Professor Griff, he was there that day. And a few other people, Powerhouse was there, but I ran into the brother again. He was doing that event, and I bought this one from him, right? The one with the G-Yame symbol on there, because y'all know I love G-Yame symbol, Afurakan symbols or whatever, right? A lot of Dinkra symbols. I got a great book, matter of fact, Matter of fact, let me do this 1 second. Where we're at. Love this book right here. All right, this is my little office in my office here on my bookshelf. Even got last name, old slave name down there. No, but seriously, the Dinkra Dictionary, a visual primer for a language in the Dinkra, right? It has a lot of those different symbols in there. I got others too. I should have put all of them down, but I ain't gonna be on that long. I'm gonna get out of here. But just understand again, culture, because y'all know we about culture over here. We don't, make no, no mistake about it. We all about, understand the origin of, how a lot of stuff came to be from our perspective, right? Again, as they say, the victor gets to write the history book, right? But we know the victor that pretty much got the history in place that we're living under right now. We know it's highly flawed, it's skewed, it's biased, there's a lot of bigotry, prejudice value to it. It's a whole lot of we did this and we did that, and they ain't do nothing like that, right? Let's keep it 100, right? A lot of the world's greatest inventions, innovative values, or just modern technology that's been upgraded from those who already set that in place came from a lot of people like this right here, right? A lot of these tribes and nations like these here in the Dinkra. Again, we can go down the list, but we get it. We ain't got to play that game. But anyway, again, a lot of great symbols in here. Gives you the etymology value of them, origin values, what they translate into, kind of like the meta nature of what West Africa, right? And the Dinkras have some of the most, in my opinion, the most expansive, right? Anthropomorphic or just, pictograph values of symbols that, translate into powerful meanings than that even of what? Kemet or Europe. Europe or Egypt, right? Again, go through a lot of those Dinkra stuff, man. West Africa is loaded, right? Loaded in history, right? Right? The Ghanaian mythical two-headed crocodile, right? Come on. What's the crocodile in Kemet, right? Sebek, right? We know it as Sebek, right? West Africa been popping on that level. So that lets you know they connected. That lets you know that they connected. That lets you know that, number one, not only connected, but they are what? They are relatives, right? Be it distant cousins or whatever, but migrations happen around Africa for millennia. People kill me with the idea that just because people live in the West Africa and East Africa, they never, they don't have no kind of correlation. See, that's racism, right? That's racism at the most highest level. Is if people didn't migrate all over Africa, coming up out of, Muna Matapa, Hutu, the Zudi, right? The Hutu people, whatever, the Pygmies, as if these people didn't migrate, the Bantus. As if they didn't go in the West, they didn't go in the North, they didn't go in the East, as if they didn't leave Kemet when Kemet was starting to fall and go into what? Central, right? Chad, Niger, and even in the West Africa. Like the nerve of people to try to be that. But y'all get it. But I'll leave that alone. This show ain't even about that. But yeah, this is a good book, guys. So again, you can get a lot of good stuff out of here. Prints, make you a lot of t-shirts out of this. But you can take a lot of stuff out of here and really start you a nice little business. I've been supposed to do it for like for the longest. I just never got around to do it. But hopefully I will. So, and speaking of t-shirts, the t-shirt that I have home in here, again, I want to give a warm, special shout out to everybody, a part of our little movement, our group. You guys came together, and obviously provided this shirt for me by way of sister Kiana, right? She produced it, but a lot of people gave their input into making this shirt for myself. Obviously, they gifted to me for all the hard work we do. So I like to say we all do the work, even though I might be kind of leading a lot of the mentors, whatever sessions. But as I always say, Ubuntu for a reason, right? We are because, I am because we are. So it's always a concerted effort by all of us, right? So the family got together, and this is the shirt they got gifted to me. So y'all know my little saying, peace, power, and profit, right? right? Peace, power, and profit. So beautiful shirt here that goes along with my storyline. You know, the values of what I stand for. Couldn't be more happier. Again, I sat on it for a long time. I've been had this shirt for a while, but it's like now, you know, when I wear this shirt, you know, of course, it really represents what I stand for. I like to say, be the brand that you are, meaning adorn yourself with the brand, or makes you brand yourself with what you want to be known for. Is my point, right? We're moving away from all this just buying name brand because it's this. Now that's somebody else's. No, brand yourself with what you want to be known for, or what you want people to see you as, right? So in this day and age right now, a lot of people out there making t-shirts, they doing just that. Make your own, you know, path. Let people, you know a lot about you just by, you know, how you carry yourself, how you dress, whatever. So this fit my narrative 1,000%, and I can't be no more ecstatic and happy about this shirt. I love this shirt, right? Now you can tell it still got that crisp look to it, right? So, you know, I'll make sure I'm not even gonna sweat in this thing. I ain't even break a sweat in this shirt, right? Right, even though I can get another one, of course, but no, I really do cherish it. And what I am going to do, I'm gonna end up framing it, and I'm gonna get another one, right? I'm gonna get several actually. All right, I might even get with Sister Ken. I was already thinking about that, you know, way back when I was discussing it with her back, you know, we was going over t-shirt moment, because we had a thing called t-shirt moment. I was already saying to myself, I need to put out some t-shirts, right? And so this is me kind of showing the public right now. If you want to, you know, something like this, of course, we can work that out. You know, I was already going to get the sister on it because I want to go through her, not Teespring. You know, again, that perspective, I want to go through my people, and we're going to kind of mass produce it. And then, you know, you guys can take advantage of having it too. Because guess what? You all are, you know, make up this, you know, this experience. Now, of course, you know, mine says Oba up here, Oba, right? But for the ladies, it'll be E-Oba, right? So that way, you know, that's the feminine, divine, you know, feminine ruler on the West African side, right? Benin Kingdom, whatever. And then we have the Oba, right? Which is basically translate to the king, right? Right? Or the, you know, divine, you know, masculine, you know, ruler, right? So just keep that in mind, guys. So if you guys are interested in, you know, potentially having something like this, or, you know, same replica, but, you know, for female version with Oba and Oba for the males, you know, stay on the lookout for that. We're going to we can get some of these out to the family so we all can share in this movement. And so this is basically, like I say, everything that we embody is on this shirt, right? Right? So again, demonstration beats conversation, repetition, right? You see it there. Repetition equals what? Repertoire, right? All our favorite sayings, right? This is a lot of stuff that we've been saying over the years. When we say that's a t-shirt moment, it's all in one, right? Or for the most part, right? For the most part, discipline, right? Power. You see it, right? Peak to trough, right? The shirt is awesome, right? I mean, you gotta love it, right? So you know, maybe we can upgrade, throw something on the collar, right? You know, due diligence, equal discipline, maybe on the side or down the back, right? Due diligence, equal discipline, right? But this is again cultural financial appropriation, right? In the best way, right? And we're doing it ourselves with the brands that reflect who we are. So this shirt embodies me from top to bottom. I can say that unequivocally, right? This entire shirt, you know, embodies everything about me. And for the most part, all of you all, because this is what we were, the lanes that we peruse, right? So shout out to the family again. Thank you all, you know, who was all a part of this, you know, and gifting me this. And again, just a, you know, small token, I'm pretty sure, for the hard work that we put in, because, you know, essentially that's what we do when we go live over here. We go to work, right? We don't sit here and just talk, even though I'm talking a lot right now, but it still has context, right? That's why I say context, right? Right? And content, right? So shout out to everybody. Thank y'all again. Hope y'all enjoy the bill, and I'll let y'all know more about the shirts as we go forward, because I'm pretty sure, you know, I would like for you guys to have them same shirts as well, because again, we all embody it. We all embody all these things, right? It's not just specific to me, even though I might have said them here and there, but it still embodies who we are as what? A body of politics, or as a people, right? So shout out to you all, right? All right. That's it, guys. So yeah. Tune in again. Urban Economic Empowerment Show starts at 6 p.m. unless Sister Monica got something going on, because that sister been busy lately. So shout out to her making power moves as always, a real power broker, right? As she is. And if not, I think somebody over, you said It'll come back this evening if Mo don't go live. I possibly could do that. I possibly could do that over Chris. Yeah, if Sister Monica don't go live, because I don't have anything on my books for this evening, right? I gotta say that kind of looking at sideways. Let me double check the side of my brain here, right? But because I'll be busy a lot, sometime on the of late on these Wednesdays and throughout the week because of other stuff. But yeah, if not, I should be able to come back on. If Sister Monica cannot, we'll do another live stream and we'll do our own version of the Urban Economic Empowerment Show. It's the same, of course. It's just different channel. It'll be on my channel as opposed to on the Dagger Squad channel, right? Unless Garfield, got some going on, don't got some going on. Maybe we got to go over there and do it over there. But nonetheless, y'all already know everybody over there, family, same way they are on this side. So if not, we'll go live here and we'll do Urban Economic Empowerment Show over here. All right, and we'll discuss a lot of the topics that we've been discussing, and we'll go from there. All right, so that's it, guys. So let me get ready to shut it down for this small intermediate. Well, I guess this little break, break session, I should call it, and hopefully we'll go live again. Excuse me, go live again when Sister Monica cranks up the channel. If not, then maybe I'll do it. All right, so that's it. So yeah, thank you, Oba Marquise. I see you in the building. Thank you, Oba. Right. Again, you guys don't know how, man. I'm grateful, man. Y'all know I'm one of those grateful brothers, bro. Don't take much from me. And I already feel like a kid in the candy store. Can't stress it enough, man. Again, this shirt right here is every bit of all of us. Right. This shirt right here is every bit of all of us. Right. It embodies what we desire to be, what we are becoming, and what we will be. Right. Because again, we're trying to build strong men and strong children, right? And strong women and strong, young ladies, right? Right. So that's what we're about over here. Right. So thank you all. Thank you all for the shirt. All right. So that's it, guys. So I'm gonna get out of here. I'll see y'all on the next one. Well, until we go live again and figure out what's gonna happen with the Urban Economic Empowerment Show. Right. All right. So you guys enjoy the rest of y'all afternoon. I hope today was profitable for you in knowledge and or fiat currency profit, but nonetheless you gain more than you lost today in life, period. I hope that was the kind of day that you guys got out of y'all's Wednesday, this hump day. All right, so I'll see y'all on the next one, guys. Peace, power, and profit. Shimotep. See y'all on the next one. Peace, everybody. Peace, family. Peace.